Hello, everyone. Welcome to Market Opening Bell on Wednesday, September 3rd, your 10-minute guide to the stock market. Hong Kong stocks pulled back on Tuesday. The Hang Seng Index opened 29 points lower, briefly rose by 107 points to a high of 25,724, but later retreated. In the afternoon, it fell as much as 200 points, closing down 120 points or 0.5% at 25,496. The H-share index dropped 13 points or 0.2%, closing at 9,108. The Hang Seng Tech Index fell 70 points or 1.2%, closing at 5,728. Total market turnover was 328.1 billion Hong Kong dollars. Southbound trading turnover reached 167 billion, with net southbound inflows of 9.281 billion. Specifically, net buys include Alibaba for 3.443 billion, Tracker Fund 2.524 billion, Tencent 492 million, Yangtze Optical Fiber and Cable 357 million, Horizon Robotics 289 million, Ecosol 192 million. Net sales include SMIC 1.037 billion, Hua Hong Semiconductor 1.015 billion, Xiaomi 410 million, ZTE 190 million. Data shows southbound funds have net bought Alibaba for 8 consecutive days, totaling 14.339 billion. Tencent for 3 consecutive days, totaling 3.31 billion. And net sold Xiaomi for 8 consecutive days, totaling 5.406 billion. Technically, the Hang Seng Index briefly surpassed 25,700, but failed to hold above it. We maintain our view on the key levels of 25,700 and 24,800 until one of these is decisively broken. The market will likely remain volatile. A-shares closed lower. The Shenzhen Component Index fell 2.1% to 12,553, and the Shanghai Composite Index dropped 0.45% to 3,858. Combined turnover for both markets was 2.87 trillion yuan. Statistics show that as of September 1st, Asia margin financing and securities lending balances reached 2.3 trillion yuan, up 35.642 billion yuan from the previous day, surpassing the historical high of 2.27 trillion yuan set on June 18 to 15. Financing balances alone hit 2.28 trillion yuan, also exceeding the 2015 peak. Shanghai Stock Exchange data indicates 2.65 million new A-share accounts were opened in August, up 35% month on month and 1.65 times higher than the 999,300 accounts opened in August last year. For the first 8 months of 2025, new A-share accounts totaled 7.2117 million. Analysts attribute last month's strong shifting savings into stocks, the so-called deposit migration, and reallocating funds from bonds, bond funds, or fixed income products, wealth migration. Theoretically, 6 to 7 trillion yuan in excess fixed term deposits could be reallocated, but large scale inflows depend on sustained market momentum, fundamental improvements, and regulators' stance on soaring markets. The renminbi and US dollar central parity rate was adjusted down 17 points to 7.1089. We continue to track August delivery results for Chinese automakers. Leapmotor delivered 57,100 vehicles, Xpeng 37,700, and NIO over 30,000, all hitting record highs. Xiaomi Auto delivered over 30,000 vehicles for the second consecutive month, with over 10,000 delivered in the last week of August, ranking second among China's new energy vehicle makers. Reports show that for the week ending August 31st, 2025, Xiaomi's EV insurance registrations reached 11,900, up 44% year on year, setting a new high since March 2025's weekly average of 6,500 to 7,500. This reflects shorter delivery wait times for the YU7 series, from 51 weeks in early August to 47 weeks, while SU7 wait times remain stable. The data suggests Xiaomi's Beijing EV factory phase 2.1 has likely started mass production, a long-awaited positive for investors and consumers. If September delivery pace holds or improves, Q3 2025 deliveries are projected at 97,000 to 99,000 vehicles, supporting the full-year target of 350,000. For rising YU7 delivery ratio nearing 1 to 1 with SU7 will improve average selling prices in Q3 and Q4. Xiaomi plans to expand to 402 EV sales stores across 119 cities by September's end. News Q2 2025 revenue reached 19 billion yuan, up 9% year-on-year and 57.9% quarter-on-quarter, with a 10% gross margin, significantly improved from the prior quarter. Q3 delivery guidance is 87,000 to 91,000 vehicles, up 40.7% to 47.1% year-on-year, with revenue guidance of 21.81 to 22.88 billion yuan, both record highs. Investors are focused on potential US tariff refunds, driving a sharp rise in US bond yields. US stocks fell sharply on Tuesday after the long holiday, recovering some losses by close. The Dow dropped up to 600 points or 1.3%, dipping below 45,000 and closed down 249 points or 0.6% at 45,295. The S&P 500 fell 44 points or 0.7% to 6,415, and the Nasdaq dropped 175 points or 0.8% to 21,279. Some investors took profits, with tech stocks hit hardest. Nvidia fell as much as 4% but closed down 2% after denying chip shortage rumors, confirming sufficient H100 and H200 supply for all orders without delays. Nvidia's 4-day decline erased over $340 billion in market cap, though it remains the world's most valuable company at $4.1 trillion, well ahead of Microsoft's $3.7 trillion. Amazon and Apple fell over 1%. Tesla began delivering its first Model YL batch in China, with August sales up 22% month-on-month, but its stock still dropped 1.4%. Alphabet surged over 6% after hours, after a US federal judge ruled Google could retain its Chrome browser. Kraft Heinz announced a split into two companies, disappointing Warren Buffett, with its stock plunging 7%. Economic data showed the ISM US manufacturing PMI rose to 48.7 in August from 48 in July, below market expectations of 49, marking 6 consecutive months of contraction due to declines in production and employment, despite the rebound in new orders. However, S&P Global's US August manufacturing PMI reached 53, down slightly from preliminary 53.3, but up from July's 49.8, marking the strongest improvement since May 2022, driven by sharp production rises and sustained new order growth. Expectations for Fed rate cuts grew, and rising global political and economic risks spurred gold buying, pushing gold prices up over 1% past 3,500 US dollars per ounce, a record high. Futures briefly broke $3,600, peaking at $3,602.4. Ukrainian President Zelensky vowed on social media for a new wave of deep strikes on Russia, raised concerns about Russian oil supply stability, boosting oil prices. NYMEX October crude rose 1.6 US dollars or 2.5% to 65.6 US dollars, and Brent November crude gained 1 US dollars or 1.5% to 69.1 US dollars. Our stock pick today is Chifeng Jilong Gold Mining, stock code 6693. In the first half of 2025, Chifeng Jilong Gold Mining achieved strong financial performance with operating revenue of 5.272 billion yuan, up 25.64% year-on-year. Net profit attributable to shareholders reached 1.107 billion yuan, a 55.79% increase. Net cash flow from operating activities was 1.613 billion yuan, growing 12.39% year-on-year. As of June 30, 2025, the debt-to-asset ratio was 37.19%, down 10.06 percentage points from the start of the year. The significant growth in interim results was driven by rising gold prices and the company's focus on cost reduction, including strict control of non-production expenses and effective production cost management. Internationally, Chifeng Gold made progress at key projects like the Serpent mine in Laos. In June 2025, Lane Sang Mining's first phase exploration at the SND project uncovered a large-scale porphyry gold copper deposit with proven resources of 131.5 million tons at a gold equivalent grade of 0.81 tons per ton, totaling 106.9 tons of gold equivalent metal, setting the stage for large-scale development. Domestically, Jilong Mining completed 9,143 meters of underground drilling and 11,597 meters of surface drilling, totaling 20,740 meters. Wulong Mining advanced exploration with 12,560 meters of underground work and 8,360 meters of deep drilling. The company also expanded its mining rights by securing new exploration permits covering 1.0705 square kilometers. Recommended buy price 26.7 Hong Kong dollars, target price $29.8, stop loss $25.4. I do not hold the aforementioned stock.